All right, guys. So today we're going to be going over supply and demand, right? Supply and demand is very similar to support and resistance, but instead of support and resistance, it's an actual zone where it basically acts as a support or a resistance. Supply meaning basically resistance. That means a zone where a stock cannot basically break above, and demand is pretty much a support. So basically a zone where we can't break below. So it's pretty much the same thing. Everybody follow me so far so you don't get lost. Okay, cool. So basically, when it comes to demand, and put this down in your notes, I'm not demand, my bad. When it comes to a zone, right? A zone is pretty much any time that buyers and sellers are basically agreeing on the price, right? That's all a zone is, right? That's all supply and demand is. It's basically when you have two periods of supply and demand. That's basically what I'm trying to say. When it comes to these zones, you have two periods. You have a balance period and you have a imbalance period, right? A balance period is when we have basically the market makers or just anybody, buyers and sellers, are agreeing on this price. An imbalance period is when one side doesn't agree on, and we have a break in balance, right? So to make that make sense, let's go put it on the charts, right? So right here, we have a balance period. So whenever you see a balance period, that's kind of where we say consolidation. That's kind of where we say chop, all of that. That is a balance period. That means in this particular area right here, let's plot this area, we have a balance. Like this is called balance. Now, after imbalance, you have what we call imbalance. And as you can see, this was our imbalance, right? That means that finally, sellers took over this zone and we had an imbalance, right? So that means we have more sellers in this zone than buyers, which caused a imbalance, right? So as a trader, your job is to basically find these balance zones and waiting for the break of to take the imbalance move, right? A lot of you guys trade the balance area. I'm trying to make sure I get it right because just keep saying the same word over and over. But your job as traders to find these balance zones and wait for the break of an imbalance and take that imbalance move, right? What a lot of traders do now, which a lot of you guys did before you took that 407 break today, a lot of us was trading in a balance period, right? When you trade in a balance period, that's when you have up, down, chop, chop, just all of that, right? They're literally agreeing on the price. So it's pretty hard to kind of say where the stock is headed because those are a balanced and imbalance. You're trading in a balanced zone. Did that make sense so far? Any questions on that so far? Any questions so far on what I just said? All right, so nobody is lost yet. Okay. So when it comes to supply and demand, right? You want to start off the bigger time frames, right? Imbalance is basically, it's basically like an impulsive move. You can say it that way if that helps you understand it a little more. But yeah, that's all that it really is, right? So when you come to these bigger time frames, these supply and demand zones are made for bigger time frames. Quick transparency right there. If you are a scalper or if you're a you like trading on those lower time frames, then I'm not gonna lie to you guys, it's kind of pointless for you to trade supply and demand. Supply and demand is really for those bigger time frames. So like those daily time frames, 4 hour, 1 hour, no lower than the 15-minute, honestly. And honestly, for me, the lowest I go is 30 minutes, but you can make demand zones, supply and demand zones on the 15-minute or if you want to, but normally the 30-minute is as low as I go. So that's kind of like a quick tip for you guys. So how do I identify supply and demand? Well, first, you always want to look for a impulsive move up, right? You want to look for a balance period and you want to have a impulsive move up. So when we're looking at here, we can tell that this is a demand zone, right? We have this nice move up. So we're going to apply the beginning stages of the zone. So when we come here, we go ahead and plot it. You can grab it from that top or whatever to that close. I normally do the candles close, right? And then we can draw that over here, right? So this would be a demand zone. How I got it was when we had a balance period. Do everybody see what I'm talking about? This balance period right here. Do y'all see that right here where they pretty much agreed on this area? Y'all see what I'm talking about? Yes, no, maybe. Yeah, okay, cool. So this is how we identified it was we seen an impulsive move up. So we're basically capturing that area, that balance area before this move. So now when we get back to this zone, now you will know that, okay, this is a demand zone. So what happens is, and especially once they get to this zone, it's going to be hard to run puts in this zone. The reason why is normally once we have a huge imbalance out of that zone, that means there are orders that has not been filled yet. You have to understand that that's how these zones work, right? Because what happens is buyers and sellers agree on the price, and then the demand, so that means buyers, they basically, there were more buyers in this area, and we had an impulsive move out of this zone. So that means we left orders that has not been filled. So what happens is whenever we get back to this zone, guess what's going to happen? Can anybody guess what's going to happen? Well, what's supposed normally happens? If we have orders that are if we have orders that aren't filled, that causes a bounce, right? That causes not consolidation. I mean, it could be consolidation, but what we're saying is whenever you have a huge move out, it's basically saying like, oh man, they left me, right? They left me. You know what I'm saying? I didn't get to fill that order. So what these what smart money do is they're not about to chase it. Y'all gotta understand, smart money don't chase, guys. They don't chase, right? They're going to just wait until they're gonna literally wait all this happen, let the sellers do what they got to do. They're going to bring you back to the zone. They're going to fill their orders, and that's what causes a bounce. Now, the rule of this is understand that after a while, right? Remember, if this demand zone is only working because orders aren't filled, so that's why when you get to this level, it should bounce, right? So what happens if we fill these orders and then we bounce? Let's say that we do something like this. So we come down here, we back in the zone, we bounce out, and we come back in the zone. What happens? Good job, good job. So it becomes weaker, right? Because every time that we touch this demand zone, more orders are getting filled. So that means eventually it's going to be so many touches to the point where this zone now it's not going to be no orders there. So it's going to cause the zone to basically just break. It's weak now, right? Does that make sense so far? Let me know, because I know supply and demand, I ain't gonna lie, it takes a minute to understand it, but like hopefully I'm explaining it pretty well, because when I was learning it, the person, I mean, literally confused the hell out of me. So let's go back from the beginning so everybody can kind of, if you missed it, right? So make sure y'all put this in your notes. So when it comes to when it comes to supply and demand, you have two things, right? The two things of supply and demand is a balance period and an imbalance period, right? So put that in your notes. We have a balance period and an imbalance period. What is a balance period? A balance period is when buyers and sellers are agreeing on a certain price, right? It's not support and resistance. So they're not going to agree on, they're not going to agree on just $400. I mean, like if SPY was at 400, they're not about to just agree on just 400. No, they're agreeing on, they like SPY at 396 through 399, right? They're agreeing on that zone, right? They're agreeing between that level. So that creates a balance period. You're not supposed to trade a balance period. Your job as a trader is to identify those balance periods and then find the imbalance move. What is an imbalance move? A imbalance move is when one side, buyers or sellers, exceeds the other. So that means if we have a push up, that means the buyers have exceeded that zone. They have won that zone, which caused an imbalance move, and we shot the stock price up. If we had an imbalance period, and the sellers were more sellers, we would have a move down, right? So that's how you know, that's basically the thing of the supply and demand, right? So then how do we identify it? Well, what we do when we're doing this, we're looking for a move up. So we're looking for imbalance, and we're going to plot that move before it ran up. We're going to plot that balance zone before it ran up, which is right here. And we're going to just drag it along because in the future, you know, we could test this zone again, right? So what I do is I just make it green. So I know that, SPY could potentially fall back into this zone, right? And if it falls back into the zone, that don't mean buy calls immediately, right? Because that's a balanced area. So we're going to wait till it gets to this zone, and then we're going to wait for an imbalanced move, and then we're going to take it back to the upside, right? And that's how you can that's how you think of it. So did that make sense so far from the repeat? Okay, cool. So that's what you're looking for. Now, the more we touch this zone, the weaker it is, because we have orders here that has not got filled. You have to understand, this was a balanced period. So once it broke out, it just sent it, right? It just went off. It was an impulsive move. And now a lot of people that were in this period fighting, they missed out. So what happens is they're going to wait for it to get back into the zone. They still got their orders sitting here to buy. Once they get back to the zone, those orders are going to fill. Remember, if somebody's buying it, that means it's going to push the stock price up, right? So once we get back to the zone, they can start buying it, orders get filled, and that causes a bounce, right? And that's literally supply and demand. I mean, that's demand zone, right? So now, how do we find a zone for sellers, right? Well, first, number one, we're looking for a supply. We want to see a sell-off, right? That's one thing that we want to see. So we're looking for a impulsive move down, right? As you can see, we have one right here. Can everybody see that? Cool. So what we're going to do is, now there's different ways to do it. A lot of people start with that you can do it something like this. So you can have right there, some people do it like that. Normally, how I normally work is you want to put it after that first bullish candle. Honestly, guys, that's kind of, I don't know who made that rule, but that's kind of stupid. I normally do it on, the close of that candle, somewhere where it makes sense at. Like I said, they're not going to be perfect, but, we had drew this zone a minute ago. So that's kind of where that zone came from. Can y'all see? Like I kind of did it at that. Hold on, let me get a better zone than this one, because they kind of messed this zone up. Actually, let's take it from here. Let's look. We have balance, break, balance, balance. So we're going to start it from right here. We're going to do this impulsive move. So you have two impulsive moves here, but let's start with the first one, right? This is the one that we actually had. So we're going to look for a balance period. And normally the close is the last bullish candle. Not going to lie to you guys, I don't know why that's a rule, but you don't have to really do that. Just look for a balance period and then just take it all the way across, right? Like that. I normally do the top of the wick, so let me just show you what I mean. So the start of this break was here. Y'all see this candle right here? This was like the start, like it had a flush right here. Y'all see the start of it? It was like around these candles, this start. Y'all see it? So I normally just take the high of that candle and the low. That's kind of how I do it. You could do it however you want to do it, but this is what I do. So I'm focusing on that candle, the start of the candle before this flush, and I do the open and the close. I keep it that simple, right? Now you will have liquidity grabs, and we're going to get on that in a minute. This was a liquidity grab. So as you can see, we had a supply zone. So let's make it red. All right, so we have this supply zone. As you can see, we broke down. You had some stuff right here. We retested it. We had a liquidity grab. But as you can see, this zone was ugly as hell. I'm not even going to lie to you. I probably wouldn't have even traded this. This zone was not an easy zone to trade just because of the way it was. Because we had too much of a, you know what I mean? Like when you get stuff like this, you would just go on a daily time frame. Because this zone was like, we had quick scalps every time I got to the zone. But honestly, guys, I wouldn't even have traded this. I drew this on the daily time frame. So let's go here. If the zone don't make sense to you, go on the bigger time frame, right? So how I did it was right here, I seen the balance period. I did the start of the balance period right here. This is what I put if y'all was in Telegram, open and close. There you go. Did this make sense a little bit now? Like that look cleaner to you guys? Did this look cleaner? Yeah, so like, it's not going to be perfect. Like I said, each time frame, it has a different type of zone, right? Not each zone is going to be the same with every time frame. Just go to the time frame that makes sense to you. That's kind of how we took this week. We were like, this is a zone that we want to watch out for. And all I did was I seen the impulsive move up, and I just took the opening and the close. and I just drew it like that. So that's kind of why I was saying that we need to wait for 407 to break. And it was pretty much we were in the supply zone the whole time. So the fact that we sold off is not even crazy because we were in the supply zone the whole entire time. You know what I mean? So it was kind of, you know, is what it is. And right here we have these liquidity grabs. So what a liquidity grab is, to make it make sense, is you have a stock basically trading in a zone. And I'm going to show you an example of this, right? You have a stock trading in a zone, and what happens is it'll trade in the zone, do what they got to do. And then you'll have something like this where they will trigger stop losses or whatever, or make you buy the breakout or whatever, and then they will pull it back in, right? And then they keep acting as it never broke that zone, right? You have this a lot. You know, it is what it is. It happens. You know, if you take the break and, you know, if you take the break and it does something like that, understand, you know, it's a part of the game, cut your losses and just move on. You get what I'm saying? But the zone is still relevant. So that means SPY will eventually become weaker to go lower. Yeah. So right now, it do look like SPY is going to come test this demand zone below, which puts us at, you know, anywhere from 399 to 396. So SPY can pretty much, it looks like SPY is going to go ahead and come to that demand zone. And if we really wanted to, we can go over here. Let's just take the color away from this. How you know that your zones are really good is if those zones, it's just like support and resistance, guys. Don't confuse it. If those zones were previously supply zones. So when we bring this over, this was the zone for a minute. We could just bring this over, you know, kind of where the zone was resisting. This probably was a zone on the lower time frame, but as you can see, you know, it was rejecting the zone earlier, then finally broke it, held it, then broke out. So that's kind of a good gem. I wouldn't do it that way. I would just keep it simple and just go like this, and boom, there we go. But yeah, SPY does look like it's coming lower just based off of supply and demand. But you have these liquidity grabs right here. You had a liquidity grab right here. And then we still literally stopped, made people buy the break. People got stopped out and then they came right back in. You get what I mean? So it's kind of one of those things where, you know, it is what it is. It happens. So let me show you an example of this. And it takes time. I ain't gonna lie, supply and demand. Learning supply and demand is extremely hard. As far as like, you know, using it on the charts, it definitely takes time to learn. But once you learn it, you will be pretty good. So hold on. Looking for that move. To make it easy, you just come in here. Okay, so let's delete this. All right. So your job is to just come in here and look for balance periods. That's like kind of like just the whole key of it is to find balance periods. What's going on Amazon? Yeah, that's all it is. It's like creating a zone where, you know, the stock don't really like to move at just one level. It's normally on bigger stocks though. I wouldn't go to lower stocks, kind of like Amazon, you know, SPY, stuff like that, that you will actually focus on zones like Tesla, stuff like those. Trying to get y'all some better zones. So we're looking for, okay, here we go. We got one right here on Amazon. Okay, hold on. My bad, yeah. Okay, they want me to extend the time frame even more. Okay, let me zoom in. Okay, here go one on Amazon. So right here, We had a balance. Y'all see this? You see the balance area? The open and close. So about right there. Y'all see I'm using that candle right here. I'm using the open and I'm using the close, right? So as you can see, every time we hit this zone, so we had a balance period, imbalance, right? Came back, tested it. There we go. Every time we tested this level, we pretty much bounced liquidity. We had a couple of liquidity grabs, but overall, every time we bounced it. But as you can see, we touched this zone, we bounced, touched this zone, bounced, touched this zone, bounced. And then guess what? As the demand zone kept going, what did happen? It got weak, right? Which caused it to break, right? That's because orders were filled, orders were filled, orders were filled. Then there you go. Pretty much all the orders are pretty much gone. And there we go. Sellers take control. So that's a cooler way to do it. You definitely gonna have to practice it. Like I said, I'm telling you guys, because you have to know supply and demand as well as you're trading. You can definitely use it when you start your trading. It's just one of those things that you just got to learn. And like I said, this is not going to be easy. Quick transparency. It might look easy, but once you start doing it, you're going to be like, bro, this is so confusing. But just keep it like that. If you keep it simple, one of the things to look for, you have a balance period, and then you just keep going over. So I'm about to go to another. I'm about to keep just going to examples until I can finally fully grasp it. So right here, we had a balance period, right? This one was a little harder. Sometimes you're gonna have to drive it on the wick. So like, okay, real quick, because I know so people will get confused on this and make too big of a zones. If your zone is too big, then like okay, this is the candle that I'm trying to grab the zone from. Y'all see this little doji right here? I'm not about to draw my zone from this top, hold on, to this bottom, right? That's, you gotta kind of think like that's too big of a zone, right? So what you're supposed to do is grab it from the top of that candle and then grab it to that close, grab it to that lower part of the actual body, right? Instead of that lower part of the wick, and then take it around. You get what I'm saying? So you don't want to have the zones too damn big, right? Y'all see what I just did? So like you don't, because it's kind of hard to try to tell you guys that, but you don't want to have it, like you don't want to make your zones too big, right? So because I know what's gonna happen is people gonna start doing this. The reason why I'm saying that is because y'all be thinking I'll be just saying this stuff to say it, but we gonna have people legit do this. Like they're gonna be like, well, Jay, I promise you, I'm gonna see it in the homework. We gonna have people drawing zones like this, right? And we don't got time for this, right? If you're gonna start from that opening candle, make it to where it actually makes sense, right? You don't want to have it too big of a zone. So as you can see, here we go. We rejected the zone, came back, imbalanced move, rejected it again, came back, rejected it again, came back, rejected it again, rejected, rejected, reject. I ain't gonna lie, this zone strong as shit. This strong as shit. Like, I mean, this is a strong zone right here. I ain't gonna lie to you. So that's why you can just keep this zone for future references. If Macy's ever come back to this zone, we can have a sell-off at this zone. You get what I mean? So that's why you just keep them on your charts. And whenever you got to use it, just keep extending it. And in the future, we can eventually get back into this zone. Why is it in the zone? We had a balance period right here, but we're going to take it from that opening candle. Hold on, the next question. What's the difference between periods of consolidation and balance period? It's the same thing. It's pretty much the same thing. Don't confuse it, guys. Consolidation and balance is the same thing, right? So basically, I'm just saying balance. Maybe if I'm using the terminology, it's probably throwing you off. You're looking for zones where it basically is consolidating, and then you're waiting. It's literally waiting for the consolidation to break. That's literally all it is. So on SPY, instead of me just saying balance, right? Instead of me just saying balance, if you want to, I'm just giving you the correct terminology that you're supposed to use. But instead of saying balanced, you could just say we're looking for consolidation, making that zone, and then pretty much breaking that one. Or where price cannot break above, because sometimes you're not going to always have that. Me personally, I'm only going to do the balance zones. Those are the ones that work. instead of just rejection. So look, check this out right here. Check this out right here. Look, real quick. Let me show y'all real quick. So right here, look at what we have. We have a balanced area, consolidation, chop, whatever you want to say. I'm just giving y'all the right terminology. So that way, if anybody ever tell y'all in the future, oh, that's a balanced area, you be like, what the hell is that? That's consolidation. I'm just giving you the right terminology. So right here, we have the same thing. So we have a balanced area. You can, in this one, this zone is not that big, so you can take it from wick to wick. And now we could draw that. So now we know if SPY get back in this area, we can have a potential sell-off. Y'all get what I'm saying? So just get back, you just get better at it. I'm trying to get y'all one that actually can play out. Let's see. One that and y'all definitely got homework over this because it's gonna take a minute. You gotta practice this. People avoid this because they, it's confusing. But let's see if anybody got a idea. Can anybody tell me a time frame that they see supply or demand? Let's see. Anybody tell me a stock that they know? Right below it, let's see, right below it. What the answer was, right below there, would it be a zone? This area would. Damn, this shit, y'all. This one was a zone. If you would have plotted it, you would have had a sell opportunity. But as you can see, let's zoom that in. Like I said, it's gonna get it's hard, but I'm telling you, it get better, right? So as you can see, we had a balanced area. Matter of fact, let me change the color so that way. I'm gonna just make this white. This is a supply zone, right? So as you can see, we had a balanced area. And then we basically actually started from right here where the sell-off began at. So the sell-off began here, this sell-off right here. There we go. We had a consolidation. We sold off. We retested this area and sold off again all the way down here. But as you can see, once we came back to the zone, we ended up breaking it. So this zone is now invalid, right? And how did I know this zone not from here? Because the sell-off was here. You're looking for a nice move down, right? You're looking for a nice imbalance. You're going to plot the beginning stages of that imbalance move. So now when we come back up there you go. You have trading opportunities. Somebody says SPY 1 hour. Let's go check SPY 1 hour. Let's delete these. What zone was it? You see it, the supply or demand zone? I mean, we technically was just on here, so. Actually, we had a zone right here on SPY, a demand zone that was broken. So right here, we had this impulsive move up. I mean, I think we just went over this. No, we didn't. We had this impulsive move up. Let's drag it. This actually was a perfect example for, if this is the one you were talking about, this is a great example to whoever just said it, if you were talking about demand. So as you can see, there we go. It ain't quite touch it every single time, but it got close to it. That's how they be messing people over, because they don't be touching it automatically. But you can also plot the wicks if you want to. That would have gave you a better, like, it actually touched it. You could have made a support level there as well. You still use your levels, guys, but like right there, as you can see, if we had used the wicks instead, you see it touch that zone, bounce, touch that zone, bounce, pretty much got close to that zone, bounce. And then as we got deeper, what happened? We end up, that zone was weak and we broke below. So this is actually a great example. I normally add the wicks in it too, just because, but it's all, like I said, it comes with time, experience, you get better. Somebody said NVIDIA daily. Let's go look at NVIDIA. This was a bag today. NVIDIA did pretty good today. Yeah, Sid. You just watched the recording. We pretty much went over that. I ain't trying to confuse nobody, but yeah, it's pretty much the same thing as support and resistance. I'm gonna make sure the recording for this is uploaded, so because I want to see y'all homework actually. So, all right, NVIDIA. What was for the person that said NVIDIA daily? Supplier demand zone. We actually had a demand zone. So as you can see, we're looking for an impulsive move up. We had the consolidation here. You know, you could plot the wicks if you want to, you know, if it ain't that big of a zone. And there we go. So right now, NVIDIA is in what, guys? Can you tell me when NVIDIA in? Right, it's in the demand zone, which if you know NVIDIA, we know 180 area, that 180 to 182. If you ever trade NVIDIA, we know those are levels that NVIDIA likes to bounce, you know? So that's one of the things. We could see a bounce tomorrow on NVIDIA. Or, I mean, you know, we broke this zone. So, you know, we could just go ahead and, I mean, we've been testing this zone for a minute. So we could just go ahead and, you know, end up breaking below. But overall, you know, it's hard. Like I said, if you ever ran puts and you were trying to wonder, like, damn, why my puts won't work? Like, why the stock refused to drop between these two levels? How many of you guys have actually, you know, took puts and it just would not break? It wasn't a certain level it won't break. It was a couple levels. Like, it just won't break this area. How many times have you ever been in a trade that it won't do that at? It just won't break this area, this particular area, like between these two prices, right? And most likely it was because it was a demand zone, right? NVIDIA is in a demand zone. And as you can see, it's a coincidence that, you know, it did start wicking right at that zone, right? Instead of just having a nice full candle going down, we started wicking at this area. Buyers start stepping in this area. So we'll see how it played out. But like I said, this is a couple of times that it has touched the zone. So we could get into weaker and then just, you know, selling off. So there's different ways to do it. Let's go. Okay. So you just got to go in there and practice a little bit. The Zooms are in the class recording tab in the Discord. Hold on. I'm about to go through some more examples. We about to just keep going over examples. What about SPY on the daily from 5768? Okay, let's go look at SPY again. SPY is going to be one of those stocks that actually, you know, respect these supply and demand zones. 57, 57, 527. To 68. Yeah, we already plotted that one. Yeah, that's the demand zone for the person that just asked. That's the one we are. This that area that we just plotted, and you would notice it better on the 4-hour, I believe. Yep, here it is. That zone that you're talking about. This is right there. So if this is what you were talking about, you are correct. We just plotted that window. There you go. Oh, how do we find the zone? Oh yeah, we had just went over that. So you're looking for a impulsive move up, a nice move up, and then you're plotting that beginning stages of that move. So when we come here, let's just go real quickly to how we find them. We had a move up here, and we're looking for a balance period and then a move up. So balance and then the imbalance, right? So right there, we notice that move up. So guess what we're going to do? We're going to go ahead and we're going to plot that area, right? That's the demand. Same thing here. We had a move up. We had a balanced area right here. We're going to go ahead and plot that area. You could do it from the wicks or the body. It's totally up to you. Plot that area. There we go. Same thing for supply. Is this making sense or, you know, let me know, y'all. This always the hardest class to teach. This one is always the hardest one, but you got to know it. Cool. Give me some more examples, guys. So we're looking for bounces as well as balances. So no, like you're looking for a balanced period, and then you're looking for an imbalance. Remember, imbalance is when one side exceeds the other, right? So when supply, so in this particular situation, what exceeded the other, guys? What exceeded this area? In this zone, what exceeded? Who won the imbalance moved in this zone? Buyers, right? Buyers. Could we have, buys me up, buyers, when people buy the stock, it means to go up, right? Who exceeded this zone? Buyers, right? So that's what we're looking for. So when you're looking for a balanced period, right? And then you're looking for an imbalanced move. Because understand, guys, you wouldn't necessarily, I mean, you could get lucky. The whole point of supply and demand is to already find, something so where it retested, it bounced. So like, let's say that somebody were to say, I'm trying to look at something that hasn't happened yet. Let's just go in here and see if something happened. Okay, well, this is obviously not it, but I'm just trying to show y'all something really quickly. So let's say that you seen, because I know I'm gonna have some people do this. Let's say that you've seen the consolidation period like this. You know what I mean? Just this, like I said, this is not it. This is not it. I'm just showing y'all an example of somebody that might do it. You see a move down, and now you see this consolidation. And now you're going to call that a demand zone, because I know I'm going to have them do it, however you want to try to do it. I know I'm going to have some people say, well, Jay, this is a demand zone, right? This is not a demand zone, guys, because how do you know? How do you know that this is not a demand zone? How do you know? First of all, this doesn't even make sense. And second of all, how do you know if we haven't had an imbalance move out of this level yet? We literally have not had an imbalance move out of this level yet. So how do you know that that's a demand zone, right? The whole goal is to already find where it had an imbalance move at. So that means when it comes back to that area, then you could take a trading opportunity once it breaks out into another imbalance move, right? You don't try to anticipate demand zones. That's what I'm trying to get y'all to mean. Like, don't anticipate these. Wait for it to come. All right. Somebody said AMD. Well, Facebook daily. Facebook daily could be in the demand zone. All right. Let's see. So while I'm doing this, I have not charted Facebook in so long. So I'm about to just come on here and I'm looking for a impulsive move up or down. And then I'm looking at the beginning of that stage to see if we had a consolidation. So let's look. I'm liking this move up here. Look to see if it was balanced. Wasn't the prettiest, but we do have a balanced area. This kind of wasn't that pretty to me, but I'm going to take that opening price. You don't want to have it too wide to that lower price. And I'm going to drag it along and see how that zone represented. As you can see, we were consolidating, had an impulsive move up, but then as soon as we got back to the zone, we broke. So technically this zone was invalidated, right? So we're not going to call that a zone. So I'm trying to look and see where you were talking about. I'm not seeing a demand zone. Oh, you anticipating. So yeah, that's what I'm saying. I don't, like I said, you could anticipate if you want to. I probably wouldn't. I can't, I don't know if this is a demand area yet because we have to wait for an imbalance move. So, oh, you said there. Yeah, okay, that makes sense. See how I said it? See, I know y'all. I know y'all. I knew it. I knew somebody was going to try to anticipate a zone. Like I said, you would probably not be wrong, but that's why I went ahead and said that, because I know people going to do that. I already knew. So let's look. I'm trying to look for some more zones. So that's not quite. Damn, Facebook ugly. But it is consolidating, though. You can treat it like regular support and resistance at that point. You can draw like your little triangle if you want to. That's different, right? But we're looking for supply and demand right now. So the zone is only valid if there's a, the zone is only valid if you have, so let's draw this real quick. Let's draw like an example of a zone, right? So when drawing a zone, well, let's delete this first. First, let's look at price. So we want to have this is how you want to identify a zone. So you want to have a period of consolidation, right? And then you want to have a move up. And then what happens is you can start, now you got that imbalance period. Now you can go ahead and draw that zone, right? So your goal as a trader is to not try to chase it, wait for us to, retest that zone. We can retest from here. And then once it breaks out or bounces, you go ahead and take that trade. You get what I'm saying? So as you waiting for the trading opportunity is not this. You're waiting for the retest of that zone. You get what I mean? So that's what the whole goal of supply and demand is. It can bounce from right there. Delete that. It can come all the way to the bottom of the zone, then bounce. Your goal is to wait for it to actually show you bouncing. So let's say that it came into this zone. What you would do is wherever your entry price is, you bought it in the zone, let's say that you bought it right here. Let's go ahead and plot the area that you bought it at. We bought it, let's say we bought it right here. Damn. Hold on. Oval. Yeah. I don't know why my oval. Okay. I don't know why I was doing that. Do y'all see this little oval inside? Okay. So you're not going to always see it, but let's say that you bought it in that zone, right? You're buying it in that zone. How Gary likes to do it is I would just wait for it to come out that zone, but some people like to buy them in the zone. It's totally up to you. He'd take from his buy thing and he would do his risk to reward. He'd draw like his, because we bought it right there. So that means anything below there, we're losing. So let me see if I can draw some color in here. Damn it. Hold on. Rectangle 2. Let's make it that way. Okay, and make this one back gray. Okay. So Gary, remember we bought that little oval right there, and then you would have your whatever your risk to reward is. You could do it that way if you want to. So, right, and you could do it that way for it to bounce, or you could just wait for it to actually come out the zone and then take entries when it come out. Did that kind of make sense? What I just showed you guys. The best way to do it, guys, I ain't gonna lie, in this market is just to wait for it to break out. Like I don't see the problem is when you take it in the zone, the problem is it's because it's chopped, right? Especially with the contracts we got now. We don't know how long it will stay in this zone. So the best idea is to wait for it to break. I know that I teach you guys anticipation, but when it comes to these supply and demand zones, this is not an anticipation, right? You might as well just wait for it to break out. So instead of doing it that way, how I would have did it was it can stay in the zone as long as it wants, but it would have made me not take puts. You got to understand the reason for it. Just it's in the demand zone. So I shouldn't take puts. That's really what the zones are helping me. You get what I'm saying? It's helping me not to take puts in a demand zone, right? That's what it's saving me from. So not telling me to buy calls. You have to understand as traders, you have to understand. So yeah, we never supposed to buy when it's consolidated. That's basically what it means. So as traders, your job is to basically try to avoid chop. Understand, just think about it. When do you guys lose the most money, right? Can anybody tell me when do traders lose the most money? Like, be honest, look, when do we lose the most money in chop? That is literally the number one thing that makes us lose money is chop. Literally, that's the number one thing. Swings chop, but it's really chop. That's literally what it is, right? When it's choppy. When buyers and sellers are basically fighting over a price, that is when we lose money because what happens is, boom, 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 it's just chopping. And like, I know I'm going to have my scalpers. Oh, well, Jay, I can trade and chop because, it's really quick. It's really this and that. Understand, guys, you have bad wins and you have good wins. Just if you won a trade, some people, I'm not gonna lie, guys, some people actually get lucky as hell trading and chop. Like it ain't even about them, they like a good trader. They just got lucky as hell, right? Because not every win is a good win. And the problem, that's how people end up blowing their accounts is because they'll win on the trade that they weren't supposed to win. So they're going to actually think that's the way to go. And when they try that later on down the road, they end up blowing their account, right? There's a such thing as a good win and a bad win. So let's say that you were, you bought this balance area, right? And then you actually bought it and then it bounced up and you took profits. I ain't gonna lie to you guys. It worked, but that's not technically a good win because do that 100 more times. Trade that 100 more times. Do that. Guaranteed you. Count gonna be blown. Guaranteed it. Now scalpers is a little different. You know, if you got where the scalpers come, if you have wide ranges. So I ain't gonna lie. Lately, this market, especially with SPY, you know, we had a demand zone, I mean a supply zone from 407 to 417, right? That's a 10-point zone. That's $10 zone. So for scalpers, that's fine. That's a huge zone to trade in. But some of you guys trade in a zone where it might be, you know, instead of like SPY was making moves like this, you know, scalpers can eat that, right? Because it's making big enough moves for them to profit enough. But some of you guys trade in zones like this, right? Where it's literally impossible to kind of really make money. You know what I'm saying? So that's the zones that you want to stay away from. But if you're not a scalper, don't even try it, guys. Wait for the breakout and then take the trade. So how I would have took this trade is, as we were in the demand zone, I would have just acknowledged it, right? Trading is a patience game. The more patient you are, the better you're going to be off. And I need to, you know, I got to repeat this to myself as well, guys. I'm not perfect either. You know, it's a patience game. How I work is, okay, boom, we know this is a demand zone. All right, I know not to run puts, but I know not to run calls. It's not ready yet. So as we start, you know, coming up, boom, we still in this demand zone. There's no point in taking the trade yet. No point in taking the trade yet. Then once we break out, that's when I can start. We start wicking, we start holding that above that zone, normally a support level. Then the trade is now ready for me to take it. You get what I'm saying? It's ready for me to take it out of the zone. Do that make sense? Cool, right? So that's all the zones are really doing. They're helping you from, you know, being chopped up, right? Because if you're trading just solely supported resistance, the only problem with that is what happens is you say, okay, well, and nothing wrong with it. I'm just saying you gotta know. You can't just say, well, okay, this is what happens. People are like, okay, well, this is my support level. You know, I'm gonna take the double bottom or whatever bounce it is. And what happens is you will have something like this where boom, and then you like, you know, have maybe a little fake out right there. You be like, okay, well, it's below my level. I'm cutting, and then you see this, right? Normally, if you would have had a supply and demand zone, you would understand that that was a zone. You get what I'm saying? Make a difference. So it kind of helps you a little bit stay in that trade a little longer. Now, somebody asked me where I ought to have a stop loss. When it comes to these zones, now we are in options. This is probably where I probably need to be a little more transparency at. We are trading options, guys. So it's not the same as other trading things. Like if we were trading shares, our stop loss will obviously be below the zone because, you know, it won't hurt that bad. But not gonna lie with you guys, when it comes to options, it's kind of hard to hold. So for me, I know that this is still a demand zone and I know that we still can bounce. But if I'm taking the break of the demand zone, my stop loss will be if we close back below it. And the reason why is because in options, our stop loss has got to be a little tighter because we can't really hold if it goes right back down to below that man zone. Why? Because we're trading options, it hurt more. You get what I'm saying? So that's kind of one thing I should have been saying from the beginning is with the options, yes, you can trust your charts, but at the same time, guys, you have to manage that risk because, like I said, we're trading options. So we don't get the luxury as Forex or trading shares or trading equities or any of that because once we go down, you know, we're losing, you know, more than just the stock price going down. We're losing that demand. You know, those premiums are losing. And, you know, if we pull back, it's going to have to now go higher than what we bought it for just to profit. So understand that, guys. Definitely start using those tighter stop losses just because we're trading options. We got to start being a little more realistic because I could have bought the breakout here and whole time, you know, it's still bullish as long as it's holding this demand zone. But if it dropped all the way down here, you know, I'm probably going to be down 70, 80%. Did that make sense? So, yeah, it sucks that it happens because it gets hold the zone and bounce right back out. But, guys, we have to understand we're trading options, right? It's not going to – we can't hold like we want to, especially right now. You know, with the IV being so high on everything, it's a lot harder to hold now. So you're just going to have to cut that loss and then just, you know, reload, right? But still don't take puts. That's the whole goal of this stuff is not to take puts, right? Not to go against the zone, right? Same for a supply zone. We had to impose a move up, right? We're waiting for that imbalance move out. And then as we retest, I might actually show y'all a good example on why we lost. Then you want to take it on the break. You get what I'm saying? Let me show you an example of a zone that's getting on my damn nerves. This damn zone, I hate this zone. I hate this zone with a passion. This damn zone. So right now, we got that impulsive move up, right? We got some consolidation right now. Well, actually, this one, that's probably where I messed up at. Now that I'm looking at this trade right now, I'm anticipating the zone. So see, even I make mistakes, right? I'm anticipating this zone right here on Visa, right? I'm anticipating the zone, and you see, I make mistakes too, right? It look like we finally coming down, but this one can actually be, and that's why I said this is actually a smaller stock, guys. So this one can be a little different. You know, you got your support level here, but this is a zone. This is not a zone yet, but this could potentially be a zone. So I'm anticipating the zone. I'm not gonna lie to you guys. That's why. But you see what happened? I lost. I definitely lost because I anticipated a zone. So for here, if you still want to trade Visa without like actually saying a supply zone, I mean, honestly, guys, just make it a regular consolidation. Like you don't have to make everything a zone. Just make it a consolidation. We know that Visa is consolidating, so we're waiting for a break of consolidation. You get what I'm saying? So I mean, you can do however you want to do it, but you know, I'm not gonna teach that part. I mean, it's regularly just consolidation break. If you want, you could draw some type of thing, but yeah, break above, break below. But like you said, you know what I'm saying? I tried to anticipate it was gonna break out. As you can see, yeah, that is not working to that. This stock, I don't know, it's holding the hell out this zone. I don't know what I did to this stock, but I mean, this is strong. Like this is holding. I've been trying to short this for a while now. I've been trying to short this for 2 weeks and it refuses. So honestly, guys, I would just wait for this damn thing to break out. Plot that and just wait because this zone hard as hell. But actually, let's go here. But we can make this a demand zone. Look, check this out, though. Check this out. Look, we had an impulsive move up, so we're going to plot that start. And as you can see, we have a demand zone in this area. So once we do break this consolidation, y'all see how I was able to make that a zone? Is it starting to make sense now? See how I was able to make that? So once we do break this consolidation, we know where it's going to next, right? And there you go. So that's other ways to do it. Let me look for another one. Okay, we had a nice little move down. Let's do the start right here. There we go. We had some liquidity grabs, but overall, is this zone holding, guys? Can I tell if this zone still valid? We broke out every time, created trading opportunities, broke out, and we rejected. Did you, hold on. Did you just plot the last candle of the impulse? Yes, basically. The start of it. So we had an impulsive move, so I'm just plotting the start of it. But yeah, this zone is still valid, right? Every time we hit this zone, we sold off. Every time we hit this zone, we sold off. Every time we hit this zone. And you will still use support and resistance, right? Like you just put in the zone to know that this is an area where sellers like to sell at. We had a liquidity grab, fake this out. But overall, this zone was still valid, right? It still would be regular support and resistance. So let's put support and resistance on here, right? Let's delete it. Let's delete the zone and just do regular support and resistance real quick. Choppy as choppy. Okay. So there we go. So here we go. It's still support and resistance within, right? Don't forget about support and resistance. But now we're going to draw that zone again, right? Take that wick, take that close, or that below right there, and there we go. So now when we're using support and resistance as well, same thing. So right there, we notice this is supply zone, right? We know this is supply zone. And then basically we know that they can't go above. We know the thing puts here. And as it breaks these levels, we ride it down to the next one. So how you would have did it was, all right, we're holding this level. As we break below, go ahead and take the trade. Same thing here. You know, you got some trade hours. The Visa is ugly as hell, so it's harder. Let me see if I make this zone wider. Would that make sense? Yeah, this zone was killed. That's why I said the smaller the stock is, the uglier the zone is. But overall, if you got to make it a little bigger if you want to, you play with it. There's no right or wrong way to make zones, right? I normally would just put it like that. But if you want to add all of that in there, you could definitely do it however you want to do it. So, but there's no right or wrong way, right? It's like supported resistance, right? But, you know, don't avoid it. Zones are just to keep you from being chopped up. That's pretty much the whole point of knowing them, right? And this is actually a good time to learn zones simply because we are in a choppy stage of the market. So like right here, we thinking that this could be a zone, even though, you know, it's consolidation, but it'd be still regular support and resistance. Let's draw that. Here we go. So if we break this consolidation, we know that the next level is that 49 level, and then just write it down, you know, so. Somebody give me another one. I know I skipped some. Oh, AAO. I'm pretty sure AAO has a zone. AAO is a stock that like to have zones. Okay, well, first we see this move down, right? Y'all see that? We see this move down. So now I'm going to plot that as a supply zone. Want to find the top of the consolidation or just anywhere where it makes sense. Do a different at low. Sometimes you can take the top of the consolidation. Here we go. So now we have a supply zone. Did everybody see the zone that I just drew? Like when I looked at it, did y'all see it? Okay. So since it's similar to a supported resistance, does old demand becomes new supply? Sometimes, yes, as long, honestly, guys, but now I know that supply and demand is pretty much similar to old supported resistance. Honestly, guys, once a zone is broken, I just make a new one. So for example, right here, we had an impulsive move down. We plot this consolidation from the highest to the lowest point, however you want to do it. You know, however, whatever works for you. Move that right here. Go right there. There we go. So as you can see, look at that. I mean, in the future, you know, we rejected it here, came back, rejected it here, came back, boom, broke it. And then as you can see, we used that zone again and did the same thing. Like there's different ways. Like some people do keep them, you know, just in case they come back. But me personally, I wouldn't do that. I would just make new ones, just me personally. But I mean, you could, like, you know, let's say you're trying to do an analysis or whatever, and you notice that, you can just plot that, you know, this was a previous zone at one point. But for me, I'm not going to leave it on my charts because if it doesn't work, I wouldn't be surprised, if that makes sense. But as you can see, this same exact zone was a supply zone previously, but it was eventually broken, right? So I created a new one. But if you wanted that extra confirmation, you kind of look like, okay, well, this was an area before it broke out that sellers like to sell. You get what I'm saying? So I guess just different ways to put it. I think maybe snap after it gapped up 78 was a zone and had a liquidity grab. All right, I'm gonna check it out. But that was a zone right there. So literally how I would have took this, I'm about to just run y'all down exactly how this trade would have went. I'm finna show y'all exactly how to take a supply zone trade right here. This is actually very nice. So here we go. We plotting that high and basically you could just do the consolidation really at that point. But overall, we're doing that area right here from that top to that low on that starting candle. And then as you can see right here, we would have made that. We're not even going to color it. This is a supply zone. What did we create at the supply zone, guys? So we had the balanced area, imbalanced, came back. What did we create here? A double top into a supply zone. There you go. Perfect, right? Double top of the supply zone. That supply zone gave you that confirmation. There you go. Take the trade. You get what I'm saying? So what most people want to do is you want to have, I like a pattern or something. I don't just take it just to take it. I like a pattern at that zone or whatever, and then go from there. You know what I'm saying? But all the time, you're not going to get that. But sometimes you will have like a bear flag or a rising wedge or anything like that at those zones. Normally you will have like double bottoms at demand and stuff like that. Somebody said, let's see, is they're making sense though? Anybody confused so far? Let me look at Snap. If you're confused, let me know now. I'm trying to explain this the best I can because it is sometimes it'd be confusing, especially teaching this one. This is probably one of my harder classes. This and tape, those are the two hardest classes to teach. I think Snap, after it gapped up 78, it was in the zone on the daily. No, I'm not really. Snap ugly. Let's see. We had an impulsive move up right here. So we had an impulsive move up here. So we're going to plot that consolidation. Why the hell is it an arrow? We're going to drag this all the way along and see if this zone actually made sense later. No, it literally killed that zone. Let's see. Trying to think. Snap was choppy as hell. And then this is a smaller stock as well. We had an impulse to move up. We had a zone here. Okay, this is a good zone. So there you go. That was a great zone right here. So let's plot that, make that right there. Like I said, I normally do it with bigger stocks. So Snap, I probably wouldn't even did it. But as you can see, impulse to move up, I plotted the beginning. Here we go, ran up, boom, bounced off of it. I would have took it as we broke out. And there we go. Would have made a nice little trade on Snap. Then as we tested again, tried to bounce, then we finally, broke below it. Did y'all see this zone right here? The easy part is plotting zones when the stuff already happened. The hard part is actually plotting it while you're trading before it actually happens and see your zone works. July 26, 2021. You saying the supply zone? It was where that big gap was. This? Yeah, I know I'm slow. Y'all probably gonna have to just send me a picture. Yeah, I know I'm kind of slow. I'm trying to think, do I really see a zone right here? I see a supply zone. Nah, that one's strong enough. I like those moves. Yeah, something like this. I like that right there. I like that. Rejected, created a double top, took it down. But as far as the gap up, I'm not really seeing nothing just yet. There's so many wicks on Snap. Damn, Snap is actually a hard stock to trade. Now I'm looking at it because it be wicking like crazy. I'm trying to get y'all a good one that we can actually. Let me get y'all a good one. AMD 1 hour, 104 to 106. I'm actually looking at AMD tomorrow for puts if we are bearish. So that's something that I just made a couple of. I'm looking for a wick fill. We're gonna learn about wick fills as well too. I'm looking for a wick fill on AMD if we're bearish. 104 to 406. 104 to 406. Yeah, let me check the cap real quick. Yeah, let me check the chat real quick, y'all. Hold on. I used to have boot camp mentees. Just that was the gap I was talking about. Let me run back to this real quick so I can see. Actually, let me just look at it. I'm the reason why I don't like this zone just yet is because it never really made a nice impulsive move down. That was pretty much just chop, honestly. I wouldn't call that a zone because remember when we're identifying zones, we want to have a imbalance move and then a balanced move, right? First. Right, we want to have that, and then we want to have an imbalance. That's like kind of the thing that kind of didn't make an actual imbalance move. No, those I wouldn't count the gaps. So that was a little harder. I wouldn't even have traded that. That would have been probably just simply supported resistance. So you got to understand, you don't have to use zones for everything. How I would have traded snap. Let's go back to snap on something like that. I wouldn't even have made a zone. I literally would just did this. All right, snap been holding this level for a minute. I mean, you wouldn't have caught this move anyway because it gapped down. Maybe that looked like that was earnings, but like you would have plotted the lowest point. This was resistance level, came back, tested that level as support. We know that that is a strong level. Once it had broke that basically $70 level, I would have just took puts. I wouldn't even have tried to make that a zone. Y'all get what I'm saying? So I would have just kept it like that. You know, I would have used regular supported resistance for that. Somebody said AMD 1 hour 106 area. Like I said, I'm looking for AMD puts tomorrow. This market has definitely been trying to confuse people, but it's all good. 106. Where is 106? What is this? 106 area. Oh, this week. Okay. You said 106 area? What zone were you talking about? You talking about supplier demand, so I can know. Supply. Let's see. We're looking for an impulsive move down. We have some consolidation. This might look better on the 4 hour, or maybe, let me see something. I just want to check if when it's that tight. Nah, this look better on the 1 hour actually. Or let's try the 30-minute. Not a 30-minute too high. So maybe the one, maybe like a 2 hour or something would have probably made it a little better looking. Okay, so we found the imbalance move. We're going to plot that consolidation right here in this area. Try to get it the best you can. I'm going to just plot that wick. I would have probably did it right here and missed out on that move. I ain't going to lie to you. I would have probably missed it. But if you would have did, that's why I say, if you want to do the wicks, you can if you want to. There's literally like, there's no trader that can tell you what's the best place to put it. You know, like if I probably would have missed that part because I would have probably had mine right here. I'm not gonna lie to you guys. I'm not gonna just move it down there just because it's there now. I probably would have had it here and definitely missed out on that move. But if you had put it at the wicks, you would have had a better zone than you would have seen it, touched it, and rejected. So I would have missed out. But actually, no, I wouldn't have. The reason why is, what is this, guys? What is this level that rejected? What is that? If you didn't have a zone, what would it be? It'd have been a resistance level, right? Why? Support, broke, retested support as resistance, went ahead and took the trade. Don't forget support and resistance. I don't want you guys, if you suck with support and resistance, you just stop doing support and resistance and and try to only make zones. Like, nah, like, still got support and resistance up. You just have zones, so any more area. I mean, any more charts. Any more chart. Give me one more. You guys are gonna have to practice on this one, right? You're just gonna have to practice. Just practice learning it. And if you don't want to use it in your trading, that's totally fine. But you still got to practice it, guys. Because it's going to be a time that you're going to notice it's a clear zone and then lose. Give me one more. And then after like a couple of weeks of you guys practicing it, we had come back and do a recap and kind of see like how you guys doing with the zones or whatever. So nobody gonna give me a zone. Come on, somebody, give me a zone, give me a zone, give me a zone. Give me some that you think is on. Tesla. Oh man. Tesla. Fucking Tesla. Start from the bigger time frames, like always. Let's see if this annoying stock has a zone. May 6th, 26. Yeah, I'm trying to look. I want to say, let me look at the 4-hour. Looking for a stronger move down. I like this move down. I'm gonna come to the smaller time frame to see if that moves makes sense. Let's see if that move had made sense. I like this move, but they wasn't agreeing on price right here too much. It didn't really hold like kind of like in a better consolidation. So I don't really like that. I don't like that either. The only real tight consolidation that I have is this, but it didn't. Let me go on the 4-hour and see. You guys got to kind of look. And if it ain't there, guys, like keep it simple. If it's not there, then don't force it. Just make it supported resistance. They didn't really agree on price really much on. Oh, well, you got here. We had like a little zone here. They kind of agreed on price in this area. Kind of like this area right here. Right. You could do either there or you can do the wick if you want to, however you want to do it. So they kind of agreed on price right there before we had this imbalance move up. But yeah, that's kind of the only one that I see. I don't really see. I can't really tell a supply zone right away. Like, because this wasn't really agreeing on price, especially with a wick like that. So yeah, I'm a single out Tesla for right now. Yeah, I'm a single out Tesla. Tesla probably would have just did regular support and resistance. So like right there, that was a level. That's 180. Also, guys, get used to fixing your levels if you have to make them whole numbers. So that's 779 90. So I would just go in here and make it 780 and just keep it that way, right? 780. Get used to doing this right here. This is 779, 72. So what will we round this up to? 679, 72. Where will we put this at? 680, right? Just keep it that simple. Use those whole numbers to your advantage. And then what's this right here? You know, that's 620, 40. So I would just go ahead and make that 620. And just, it just make it look a little more professional. That's all. Don't, if you don't want to do all that, you don't have to. But it definitely, it's a lot easier trading whole numbers. What's the minimum amount of candles you count in the zone? There can be a lot of candles in the zone, but I kind of like at least, 4 to 5 candles to make it like an actual balanced area. But I've seen traders do 3 candles. I didn't see them do 3 candles. Like some traders would have actually counted. I've seen 3. That's the lowest I've seen was 3, right? 3 candles. That's the lowest I've seen. So I say 3 to 5 in an imbalance move to really call it a zone. Cool. Other than that, as far as this, before I let you guys go, real quick, I want to ask, how are you guys supporting resistance working? Like, are you seeing that your levels are actually hitting or they're not? Like, let me know. That's kind of one of the most important things, having your levels. Have you guys levels been hitting or they've been kind of great levels? Definitely hit. Good job. Love seeing those levels hit. I think most people are starting to understand supported resistance. The zones, like I said, is going to be a little more advanced, but, focus on supported resistance first, and then you get more to the advanced material. Cool. But like, remember, when we're looking for support and resistance, real quick, I'm going to keep telling you guys, whenever it comes to these levels, you're just looking for significant levels, right? You have support right here. You see how that's support? And then what do? We use that support as a resistance. Boom. We plotted that. Here we go. Sold off, right? We came back up there, sold off, came back up there, sold off. So that's how you tell if your levels are actually, you know what I'm saying? Like make it make sense, guys, right? Just come in here, just practice them. That's why I delete mine. You get wicks like this. I know I'm talking about other stuff right now, but you get wicks like this, always plot those. Always, always, always plot those long wicks because those can be levels as well, right? We have wick fills, we have all types of stuff. So like AMD, let's go to AMD. Let's look at a trade idea for tomorrow. So AMD, right? If we're bearish, now I'm still adjusting to this market, as I can tell that I haven't had the best success right now. It's really this chop that was killing us. But now that we're out of that zone, finally, I think we can have a clearer market for a little while, not too long, but a little while. We can kind of have a cleaner market. So I plotted this level because we have a wick fill below. So if AMD can hold under this level right here, this 99.61 level, then we could go ahead and take it down for this wick fill to 96, right? I'm going to teach you guys wick fills next week. But I'm honestly, guys, real easy. It's not really much to, it's not really much. Like if you get long wicks like this, just know that we're going to have most of the time price will fill that wick, right? It's like gap fills, kind of. So as you can see right here, we had a long wick. And I'm talking about like crazy wicks because some of you guys are going to see a small wick like this. I'm like, well, Jay, we got a wick fill down here. I'm talking about like crazy wicks like this. You know what I'm saying? That's a couple of points away. Like this wick fill was pretty much a $3.40 difference. You know what I'm saying? So that's a huge wick fill, right? That's a huge wick fill. So stuff like that. Those are ones that you want to apply. So if AMD falls below, we have a clear target to the downside to go ahead and fill that. You would do this a lot on like XPX or whatever, stuff like that, stocks like that, and just go from there. But yeah, just keep practice support and resistance. That's pretty much the best way to get better at it, is just to keep practicing it. Also, AMD definitely looks like it's created this huge bear flag. So definitely watching AMD tomorrow. And go from there. Definitely look like we created this huge bear flag. So I'm definitely looking at AMD puts if we're bearish. Understand? And we'll look at the weekly to see if it looks a little better. Now that bear flag looks a lot cleaner, doesn't it? Do the bear flag look cleaner or no? It looked cleaner. So then you can have your trend lines. I'm going to be teaching you guys trend lines. Let's see. There we go. Not going to be the prettiest, but overall, you know, we still got this trend line, bear flag into the trend line. You know, we break below that 99.60 level. Here we go. And we got lows targets to down here at these next levels right here. We have targets down to actually, let me move that up a little bit real quick. Remember, we go to the lowest point of the bear flag. Normally, like I told you guys, we're gonna actually, because I'll be wanting to show y'all guys, like, so y'all can kind of see, like, Jay, like, oh, it's easy charting it after the move already happened. So now I'm gonna start getting on, when I get on Zoom with you guys after every class, we're gonna actually look for a play, and we're gonna see after time and see if that play plays out. So you can kind of see my thought process before it actually happens. So if it does happen, you can kind of see, okay, I see what he's seeing, right? So I think that'll help you guys. You know, so right now that's why I'm looking at AMD. We have a trend line rejection. Every time we hit this trend line, we reject it here, reject it, try to break above, overall still rejected it, couldn't hold above, reject it. So I'm looking for a move down. Bear flag right into trend line. There we go. So that's why I'm looking at AMD puts, and we can hold below that weekly level. We do have another level at 96, but below that we can get pretty low. Let me see. Somebody said on the daily time frame, I'm seeing a bullish pennant. So is it better to look at the longer time frame? So let's go see. I'm not gonna lie to you. I don't see a bullish pennant starting at 525 on AMD. A bullish pennant. Yeah, I'm not gonna lie to you. I ain't seeing that one. Are you talking about this? Yeah, please. I gotta see. Send me a picture of that in the chat. I don't see that at all. Actually, let's do this real quick. Also, we got momentum shifting down. Our stochastics. I don't use it on the bigger time frame. We can actually add the MACD if y'all want to. So let's add the MACD. But I'm going to show y'all a trade before it happens, so y'all see like the process of it. MACD apply. Hold on. So now that we got the MACD, we got the stochastics up. If you still want to use on the bigger time frames, it's totally up to you. But now that y'all see, what is the MACD about to do? So look, let's just read this whole trade, right? So right now we have, so let me walk y'all through exactly how to trade AMD. So let's go to the smaller time frames. That's the first one we're gonna go to, right? So the smaller time frames, let's start with the hourly. That's the one I seen it on. So the hourly, we have a support level at this 99.61, right? So below 99.61, we have a day trade to 96, right? We have a day trade. Keep this in work because I'm trying to get y'all gonna learn my strategy or whatever. But we have a day trade or a scalp, however you want to do it. We have a day trade to 96. Keyword, I didn't say swing, right? Our swing target to trigger a sell is not at 99.61. It's at below those daily candles, right? To break this bear flag, it's really going to be below 96. You get what I'm saying? That's going to trigger our swing or our bigger zone, right? Instead of taking it right there. Or what some people do is they would just take it under that close. But honestly, guys, under that 96 level is when the actual bear flag is broke. So I would take it under 96. Do that make sense? So like, for example, what I'm basically saying is we have a day trade level at 96. That's a big level to break, obviously, because that's the wick field. So below that level is the level that we're actually going to take the bigger move, because understand, AMD to make a $3.40 move, that's not a swing, that's a day trade. But to catch it from 96 to this to the next level, to catch it 96 all the way to 90, that's a $6 move. So that's a bigger move. So that will be your trigger, and that's the daily time frame. Once we get to that level, we break the bear flag. So that's when you actually can take, you know what I mean, you can take that next level down, right? So what I normally do is I will make this green, and I know that is my level to trigger swings, but my day trade level is actually to that level. So it's kind of a way where you don't have to actually swing through all this, because most likely you're going to have pullbacks, you're going to have choppiness around the 96 level, and then you can keep it going down, if that makes sense. And this trade going to play out the way it's supposed to. So you just got to kind of wait, but I'm gonna walk y'all through this trade as it go. So like tomorrow, the game plan is taking AMD below 99.61 to 96. That's like the goal for the day trade. And then below 96, that will trigger me to want to swing AMD, right? And then when we look at the daily time frame, I mean, we look at the weekly time frame, what don't that 96 look like that's the level that it'll break the bear flag? Look at it. 99.61. Why would we swing from right there? That is that out the bear flag yet? Is that level out the bear flag yet? Yes, no, maybe. It's 99.61 out of the bear flag. No, right? So why would we swing that if that ain't out the bear flag? The bear flag is out at 96, around 96, right? That's the next level of significance, is 96. And when we look at it, 96 is the next level that's out of the bear flag. So we would take AMD under 96 for a swing, but we would day trade it under 99.61 for a day trade to 96. You get what I'm saying? So that's little ways to do it. We're going over my day trading strategy tomorrow. But I just wanted to like show y'all that what I'm watching before it happened. And then when you look at your confluences, let's go look for people that be like, okay, Jay, well, how do I know it's gonna fall? Well, we don't know, but let's look at our confluences. We have a death cross about to come on the daily time frame. We have our stochastics indicator. Do y'all see the cross right there? Right? We had a cross right here, a death cross. And now our MACD is starting to death cross as well. I use the MACD for swing trading. Our MACD is starting to show downward trends, and we rejected the trend line, right? Look at the weekly chart. We rejected the trend line, and there you go. That is why it's important to use multiple time frames while you're trading. So how would I trade AMD, right? Let's say that I do my charts like this. So I got my main chart. That's my weekly chart. You don't really have to if you don't want to, but it's always good to look at multiple time frames while you're trading instead of just one, right? Because it keeps you from getting shaken out. So I have my 15-minute up, right? We got my 15-minute that keeps us from, getting shaken out because of the 5-minute or taking entries from the 5-minute. And I just have multiple time frames up, right? This is literally like my trading, kind of like my trading setup. Have my hourly chart, and it's like multiple time frame analysis. And I'm gonna get all into this tomorrow, but I just kind of want to show y'all like how I, look in their setups. So I have multiple time frames, right? We know that these lines are the bear flag, right? So then we break the 96, and then normally what I have is, you don't have to have a weekly up, but I like 4 charts up at the same time. Normally I will have the market with me. Actually, let's do it this way. This is I'm gonna show you exactly how I have it up. So I have normally ES, normally like the 15-minute or the hourly on ES up, right? S&P 500. So if the S&P 500 is starting to break a level, as you can see, ES is holding, we got this support level for ES, right? I'll just walk out through exactly how my charts look when I'm trading. And normally I will have another stock. So real quick, what is a stock that is in the same sector as AMD that we can use to gauge AMD? NVIDIA. Great job. I'm glad that you said that. I was scared for a minute. So normally I will look at having NVIDIA pulled up as well. And as this is literally how I'm looking at a daily basis. I know my chart's ugly right now because I'm not fully set up. But then we got NVIDIA pulled up as well. And we notice that NVIDIA is in a demand zone. AMD is at support. The ES is at support. So you get what I'm saying? So I need multiple time frame analysis. So I'm watching AMD on the 15-minute to break below 99.61 to go to 96, but also to give me more confirmation. I want ES, the S&P 500, to break their support as well, giving me more confirmation to take AMD down. And I'm also watching it on a bigger time frame, which is helping me hold the trade longer. And then I'm also watching a stock in the same sector that if NVIDIA is falling, ES is breaking down. Here we go. We're breaking that level. That gives me more confirmation. Did this make sense? Trading with multiple different time frames up. A lot of you guys stick to one time frame, and then that's why you don't be understanding what's going on. But like, this is how I'm trading on a day-to-day basis. I always have more confluences. I have the most confluences up, so it helps me, right? Because of that. So that's one thing that you want to do as trading. That's why I do recommend that you do get a monitor. If you're trading for your phone, you're probably going to have to flip between the time frames, get an iPad or something else. But in trading long term, definitely if you watch a lot of live trading videos on YouTube, you will notice that you don't see one person just focusing on one time frame. They're focusing on multiple time frames. You get what I'm saying? They focus on multiple things. So let's say, for example, if I'm trading SPY, right? If I'm trading SPY, I got S&P 500 pulled up. I got SPY chart, and then I have normally with SPY. Normally, what I do is I normally have ES pulled up, and you can do it however you want to do it on the side bar or whatever. Normally, I had the main chart, but I'm looking at the main time frame, right? If I'm trading SPY, and then what I like to do is I like to do the top holdings in the S&P 500, which is you have Apple or Microsoft put up, right? That helps me, right? Use the sector guy, use things that are in it. If you're trading SPY, go look at Amazon, go look at Facebook, go look at Apple. Not really Tesla no more, but go look at those. If you start seeing those fall, then that gives you more confident to take SPY puts. You get what I'm saying? Use that to your advantage. That's going to help because a lot of the times when you start doing this, you will start doing this, right? You will start noticing stuff to be lagging. That's the whole purpose of doing it this way, because certain stocks will already give you a move first. For example, sometimes Apple will go ahead and fall first while SPY will still hold a little bit, but you see Apple breaking the support, then you start seeing other things breaking that level, and then SPY will finally make that move. So that's the whole purpose of it. You're able to catch these moves by looking at different things at the same time. Y'all get what I'm saying? So one of the trades that I took, I was taking Amazon puts. Yep, exactly how I did it. I was taking Amazon puts, right? And I had no, I'm tripping. I was taking SPY puts, but I had Amazon and then SPY multiple time frames pulled up. I had Amazon and Apple put up. Amazon had already broke that level to the downside, right? So what happened was SPY was still holding. SPY actually, what was normally happening is you have like a consolidation, right? So let's go here. I'm about to just make some crazy stuff right now. Hold on. This is exactly what happened on Amazon. This actually, I had made like 40K off Amazon. I need to start doing this more because I ain't gonna lie to you guys. Sometimes I get lazy and I don't want to look at multiple time frames. But every time I pay the price of that when I don't do it. So I recommend you make that a habit of doing it. So like, for example, this is exactly what happened. So let's look right here. Amazon, we had this is a support level. Amazon was like this, boom, holding it. And then it broke and it already started coming down. And this is what SPY was doing. SPY was doing this, right? SPY was in a symmetrical triangle doing all this, right? Consolidating or whatever chart pattern you see. And then Amazon had already broke. So since Amazon broke, we started getting ready to our EMA start crossing and whatever. So what I did was I ended up taking SPY puts a little earlier because Amazon had broke, Apple had broke. It gave me more confirmation that SPY is lagging. It's going to break soon. And what happened? SPY sent it down, right? So that's why it's good to, have multiple things up while you're trading. You know what I mean? So do that today. That's the two things I want you to get. So I want you guys, I'm gonna upload a video. I want you guys to practice supply and demand zones. And then I want you guys to start building up how you're going to, like, if you're going to take a trade, if you're going to have a watch list, start finding stocks in that sector that follows that stock, right? Look at the same sector. So real quick before I let you off, What is a stock that follows Baba? What is a stock that follows Baba? Baidu. What is a stock that follows what is a stock that follows Twitter? Facebook and Snap, right? Social media stocks, right? What about, actually, this is a good one. Let's see if y'all can get it. What about Amazon? Let's see. Oh, somebody got it. Shop, Google, right? What about Apple? Microsoft, right? And you start, so that as a trader, you're supposed to be using it. What about Home Depot? I'm gonna do a couple more. Lowe's, Walmart, Target. You get what I'm saying? Right. So that's what I want you guys to do. Like, I want you guys, as you're trading, to look at other stocks in that sector to kind of tell. What's another one more before I let you go? AT&T, Verizon. There we go. So that is pretty much it for today. I want you guys to do that when you put in your watch list, find stocks that are similar. You don't have to actually trade those stocks, but you're using those stocks to give you extra confirmation. Because I'm telling you guys, you will find laggers, right? You will find stocks that are lagging that eventually do it, and go from there. But all right, guys, this is pretty much the end of class. If you have any questions, let me know. We will be back on here tomorrow. I hope you guys learned something. If you didn't, put it in the chat. But other than that, the videos will be uploaded tonight. The other one is actually done, so I'm finna send that right now and go from there. So I will see you guys. Good luck tomorrow. We are finally out that range, so wait for CPI numbers and we'll see what happens.